All right, hopefully you completed worksheet 1, and now we're going to get into the nuts and bolts of what closing entries are. Again, feel free to go through your textbook. Or, again, the 4 closing entries in your textbook are the same as the way I'm presenting them. They should be very similar. I've kind of presented my own list of accounts here, which you can see on your screen. And this is a trial balance in order by assets, liabilities, equity, revenues, expenses, all listed here. Excuse me. And so what we're going to do is we're going to, using this information, work through the journal entries, the closing entries. And so it might be helpful for you to like take a picture or do something with this screen so you can reference back to it and see where some of the numbers came from. Our first closing entry, one more thing before we get there, which is net income. It's helpful, I think, too, to kind of see this process. And I really think once you've done the last exercise, the last worksheet in this chapter, the financial statement worksheet, that this whole closing process will start to make more sense. That's my hope. But for now, let's look at net income. If you look, we have 2 revenue accounts, 75 and 5. That's a total of 80,000. And if we subtract our expenses here, the 12, the 45, the 15, and the 2,500, you should calculate net income of 5,500. And you'll see why that's important in a little bit. But first, we'll start with closing entry number 1, which is where we close revenues. And think about this closing process as just hitting the reset button on these accounts. So we have these 2 revenue accounts we talked about on the last slide, one for 75,000 and one for 5,000. Those are credit balances in those accounts. And so if we're going to close those accounts out, if we're going to reset those accounts to 0, we're going to have to debit those accounts. Debit service revenues 75,000, debit sales revenue, 5,000. And we're going to offset that with income summary. We're essentially relocating the revenues from their specific revenue accounts into the income summary account. Entry 2 is the same thing, only for expenses. And so you saw we had 5 expenses, I believe, all with debit balances, because that's the natural balance for expenses. And so our closing entry here is going to credit all those expenses, 4 expenses. 12, 45, 15, and 2,500 are all going to be credited. And then we're going to move those expenses, essentially, to our income summary with a debit. So our income summary has been credited 80,000, and it's been debited 74,500. Remember, this is our income summary account. Revenues are debited, expenses are credited. And so this is where it stands right now. This is where our income summary sits before entry 3, before we close that account. And you should be able to look at this account and do some quick math. Take the 80,000 minus the 74,500, and you see that right now we have a balance of 5,500 in this account. And so this is the entry that we need to make. We have a balance of 5,500. And essentially, the balance would have been here. But when we make this entry, we debit income summary 5,500, credit retained earnings 5,500, and essentially what we've done, and I talked about this in Unit 2 or Unit 1 or Chapter 1 or Chapter 2, we take the revenues and we take the expenses and we put them in the box of retained earnings. And then they sit in that box. And then that box is what ends up being on the balance sheet. This is the boxing process. That boxing process, the taking of the revenues and taking the expenses and moving them to retained earnings, we're watching the hot dogs get made right now because they sit in income summary and then boom, here they are going to retained earnings. So our revenues and expenses at this point are gone. They disappeared. And they've instead been relocated to this account retained earnings in the form of this credit of 5,500. One more closing entry left. Closing entry 4, close dividends. Pretty easy entry. We're just going to credit dividends. Remember, dividends have a natural debit balance. And so we're crediting dividends to close it. And then we're debiting retained earnings 3,000. A couple things on this that I see students do before I kind of wrap this up and show you the next worksheet that you're going to work on. Most of the students that have trouble with this process, it's because they're not seeing where the numbers are coming from for retained earnings. They look at this. I'm going to back up here. They look at this number for retained earnings here, this $5,250 in retained earnings, and they think, oh, I need to do something with that number. But you don't. That's the beginning balance of retained earnings. That's why I think it's really helpful to see the whole process towards the end when you prepare the financial statements, because this is the starting point of retained earnings when the year started. When this year started that we're looking at here, the retained earnings had a balance of $5,250. To that, we add $5,500 and subtract $3,000. So we're adding $5,500 and we're subtracting $3,000. So just to put a point on this, this retained earnings number here that I'm highlighting with my mouse is equal to this number. This number comes from our income summary account. You look at your income summary account, you see what the difference is. That's the number that goes here, and then retained earnings gets the same number. For dividends, this number here, the retained earnings number, is driven directly from our dividends number here. Okay? A reminder, retained earnings has a natural credit balance. Income goes in, dividends come out, which is what you've seen in the last two entries. So our retained earnings gets updated every year during the closing process. So reminder, this is how things looked before we closed the accounts. Before we closed anything, we had all these assets. Our retained earnings was sitting at $5,250. After we close, this is where we were. All these accounts are gone. It's all this empty space. Our trial balance essentially got squished in half. And everything that was down here in this area all just gets wrapped up in a box and put right into here. So our $5,250 turns into $70,750 because income gets added and dividends get subtracted. Worksheet 2 is the next item up for you, and it is a closing entry worksheet. It's a alphabetized trial balance, so it's not too easy. And what I'm asking you to do in that worksheet, or what we're asking you to do in that worksheet, is prepare the closing entries, all 4 closing entries. And I know the expense one is annoying. I think there's like 7 or 8 accounts on there. I would like you at least once to write all the expenses out. The expenses are all written out. Understand why we do the closing process. Be able to prepare the closing entries is important, very important in this chapter. The worksheet 3, I'll talk about in a little bit because I have a little bit more left. The last video in this chapter will be much shorter. There's just a little bit more left. But worksheet 3 is more closing entries, but with financial statement preparation added into, which I think is helpful. So enjoy worksheet 2, hopefully. Take a break once you're done, and then watch the short video that finishes up chapter 4.